Hi everyone, this is Gargi Chaudhary, head of iShares Investment Strategy, and I'm back with an iShares Macro Minute to talk about the impact of today's inflation report on the Fed and on the markets. So as you have seen already, inflation data came in very strong this morning, much stronger than what the market was expecting, with headline inflation coming in at 8.2% and core inflation printing at 6.6%, much above what the market was expecting, but also strength seen across many categories of the data. We had all been expecting to see rental inflation and shelter inflation pick up. What we're also seeing today in the data is that inflation X of that rental inflation is also trending higher, which actually, frankly, is a little bit of a problem for the Fed, who, of course, are paying close attention to the data and were hoping to see some deceleration in this month's print. Instead, they're finding an acceleration in this month's print. What does that mean for you and for your portfolio? Well, first of all, we will continue to recommend investors think about inflation-linked bonds, especially in the front end of the curve, that protects you in these higher inflationary periods. We would also say that, unfortunately, equity markets are probably going to continue to remain volatile, especially as the Fed probably has to definitely think about their hiking cycle more seriously and hike perhaps 75 basis points in November and an increasing likelihood of hiking more than 50 basis points in December as well. It also means, however, that fixed income is becoming attractive again, has been attractive, and now with yields rising so significantly post this inflation print, we think that owning some bonds, especially high quality bonds, may make some sense in your portfolio, given that we're back to yields that we haven't seen in over a decade. Another area of the market that we think investors should look at is actually energy equities. Energy equities will tend to do well, especially as oil prices remain stable or even higher from here, and therefore will have greater cash flows and better balance sheets in the months and years ahead. I'll stop there. Thank you for listening. For more of these insights, follow me on Twitter at Gargi_Chaudhary or visit iShares.com/insights.